Welcome back to my channel. I hope you guys are gaining value. I want to give a big shout out to my coach. I always say thank you to him, to appreciate him for always the guidance he gave me in the market. Now today's topic is higher to lower time frame using ICT. I brought out this whole chart of traders, what the time frame you should focus on as a trader based on ICT. It's not from me. I got it from his channel. Now, as a position trader, as a trader, you can't focus on all the time frame. You have to pick three time frames to focus on. So as a position trader, the big boy time frame is monthly, the main trend time frame is weekly, and their entry is on daily. As a swing trader, the big boy is weekly, the mid boy, the main trend you are following is daily. Then you can decide to enter using your 4 hours of 1 hour time frame. As our short-term trader, the big boy time frame, that's the overall trend you're going to be following, the overall movement, the overall structure. That's what the first one. That's the daily. The main trend is 4 hours entry on 15 minutes, and that's how it keeps going to become a scalper. But now you're going to ask yourself, what kind of trader do I want to become? I am a swing trader. And why am I a swing trader? I'm a swing trader because I go to work every day, so I can't sit down in the chat like short-term traders or day traders. I have to work. Now you're going to ask yourself, what kind of trader do I want to be? Now, what do I see here? These on the monthly chart, right? What our market done? Market has taken out external range liquidity. I want to start from the monthly and see how top-down analysis is being done. Price took out the external range liquidity from here, sell side liquidity. My Fibonacci is from here, from the high to the low. Now, this is where your institutional reference point comes in. Your order block, your breaker block, your fair value gap, your mitigation block, your rejection block, your liquidity void, everything that you have learned, the seven institutional reference points you learned from ICT, you have to play it now. Up here is premium, down here is discount. Now, what do I have here? I have another block, right? That's the first one. On my premium, I look for the second one. What am I looking for again? I look for my fair value gap, the closest one above, and I have one here too. There is none here. All these are noise. Now, all I know is that on 1 month I am on premium. But look at this whole. Make sure on your book you write this whole three time frame. The main boy time frame is 1 month. But for me to trade this whole trend, for me to trade this trend to come down like this, right? There must be a change of character on 1 week. This is how it helps me when I'm analyzing. I use paper and bar and write it down here. Now, you are using this your time frame. Let it be around you here just to guide you. Now, I will delete this around here because why? I know that I'm aiming for price to come around here. Now, don't forget, as a swing trader, you can start your analysis from 1 week as the big boy time frame. But as a position trader, for them, a change of character has taken place around one of the fair value gap on one weekly. But as a swing trader, my big boy time frame is telling me weekly. And what am I seeing in weekly here? I see a shift in market structure taking out external range liquidity from here. Can you see it on weekly? If I take my Fibonacci, I want this to be around so you can see it yourself. Now, on weekly also on position trader for swing trading, I'm on my big boy time frame weekly. What do I have? This is your range. You have your range from here to here. So as the weekly, I know that price has to take out this low. But what will I do? I will take my Fibonacci again from the high to the low. Let me type this for you to see. Now this is what we call premium. Sorry, premium. I'm going to make it very small. Premium is up here, and I have what? I have my discounts. I have my discounts below, right? I have my discounts below. Now, what the market tells you is that every time you are in the market, anything premium you sell, anything discount you are buying. Now, what do I have again? Institutional reference point, my other block. Is there a fair value gap? No. But I have something here. I have a volume fair value gap. Can you see it here? I have a volume fair value gap here. Can you see it? Now, on my weekly, right, price has shifted structure. On my swing trade, price is telling me that I'm I'm sell. Now, what happened next? I go to my daily. Now, as a position trader, daily would have been in the trend from here. As a position trader, the daily they would have been in the trade from here and they'll be going down, targeting this low. But for me, that I am a swing trader, just know how it is. Navigating it now. The swing traders, there was a shift in market structure here. Can you see? There's a shift in market structure here. I'm going to delete this Fibonacci and drag this down. I'm only bringing it so you can see the difference. Now, another what happened, price went and hit on the mitigation block here. And after tapping on the mitigation block, what happened? Price pulled down. And what could the price create? Price did what? A shift in market structure here as what? A break of structure, which is our sell side liquidity, right? Now, don't forget, for those that are position traders, they are already in the trade. They are targeting this level. But me, I'm a swing trader. I'm not in the trade, right? So I'm waiting for price. I'll use my Fibonacci again from the high to the low. Where is my diagram? And don't forget I told you, up here is premium, down here is discount, right? Now, anything down here is a sell, is a buy. Discount is a buy, premium is a sell. I'll come back up here again. I'll tap what? My other block from the high. I'll mark my other block from the high. On my other block, what do I have? Sorry, on my diagram, what is in discount? My 7 institutional reference point, other block, fair value gap. I have my fair value gap here. What do I have again? Is there a breaker block? No. Is there a mitigation block? No. Is there liquidity void? No. Is there rejection block? No. You keep ticking. Now, for me as a day trader, right, as a swing trader, I can just jump down to 1 hour. Do you see it? I can pull down to 1 hour. But you that actually, for those that are what? A short-term trader will come down to 4 hours. And what happened? On 4 hours is a break of structure here. Break of structure, and that structure happened here. That's on 4 hours, right? That's on 4 hours. A structure broke there, right? And for you, you would mark this whole zone as your other block, here, and your fair value gap. Then you will what? You will come down to 15 minutes, waiting for price in 15 minutes to do this. That is what you'll be waiting for if you are a short-term trader. But me that I'm a swing trader, I will go down to 1 hour. By this time, I'm already in the trade. And how am I in the trade? Do not forget that I told you that down is discount, right? Up is what? Premium. And as a swing trader, you can see here, right? I can navigate it. I can navigate myself to be a short-term trader, scalper, swing trader, as long as I understand this rule beside me here. Now, this is our Fibonacci from the high to the low. As a swing trader, I'm already in the trade. I am counter trading. I won't say counter. I will call it correction trading. Are you with me? I will call it correction trading. Now, what do you see that happened here? Price did this, came down, did this, created a mitigation block as a shift of structure. I learned this the hard way. I hit stop loss last week, which I got some correction. That this does not mean that structure has automatically changed until this point has been shifted automatically. That was the correction. I had to lose money to learn that correction. But you would have been in the trade and you would have taken your entry from here, or in this small fair value gap here. Put your, you can even use a swing point entry, is your choice, or you can put your entry around here, the fair value gap, target this low, or put your low below here against this fair value gap, and you target what? You target all this liquidity that price have to take. Now as a swing trader, it's very sweet because you're kind of relaxed, right? But as a 4 hours, if you're a day trader, you're a bit tense. But me, I have this, all this whole up here. This is my old lows, sorry, old highs, old highs. These are where I will put my take profit. TP1, TP2, TP3, TP4. This is the beauty of ICT. It's very, very easy. Now, I'll keep doing. Do you see? Now, for those that are day trading, where is my chart? For those that are day trading, would have hit a stop loss. Can you see? For those that are day trading, would have been hit a stop loss, right? But me that I'm swing trading, I know where market is going to. I know where market is going to. Price might get, and you see, and I'm out of the market. I am out. But those that are swing trading would have gotten to the market and they will call this a break. Sorry, those that are day trading will call this a breaker block, which they are super right. And they will come down to 15 minutes and to take another entry from here as a day trader. They will come here, price shifted structure here, and that price shifted structure again here on 15 minutes. So it will be 4 hours, 15 minutes. So we are all trading the same thing. We are all trading the same thing, just that I know where price is going to on a higher time frame, and they too also make profit on a higher time frame. And what do I get here? A sell. And this sell momentum, what will happen? I will wait for price to shift structure, which price did around here. Price shifted structure with a body. Can you see? With a body, price shifted structure with a body for swing trading on a 1 hour time frame. And what will I do next? My Fibonacci from this high to this low. Do you see? And I went for my discount. Why the price react here? We have a very big order block here. You can measure the order block from the high to the low of the order block. And what do you see? Price went to the mean threshold to enter the trade on the order block. Can you see? This is how we swing traders move. The same way those on 4 hours wait for a shift in market structure around here, they wait for a shift in market structure and price will still respect them. We are all analyzing the market the same way, but just that what makes us different is just this. Are you a position trader? Are you a swing trader? Are you a short-term trader? Are you a day trader? You need to find out which category do you fall in. The category you fall in will help you to know what kind of trader you are, what you are looking for in the market. I hope this helps you in a very way. You master your Fibonacci, you know when prices are discount. And sometimes if you want to counter trade, some individuals will say you wait for three candle confirmation, one, two, one, two, three, and they will start looking for their sell here. I'm a very impatient person, so I don't usually wait for these three candles at all. I wait for until price do a change of character. This, you're wasting my time with all this change. But they'll tell you wait for this three candle change, and when price sweep out liquidity again, shift of structure, they will enter their own trade from here to be on a safer side. So everybody have different ideology of what they are looking for in the market, but or what they need to see in the market. Everybody have their own way. But some people feel more safe when price create the three candle formation, which shows that a swing point has been created and gives them more confidence that price that want to move in their direction or move in an opposite direction that they are anticipating. So I hope this video or this class is, I'll say video, was very impactful. Don't forget to subscribe to my channel, ask questions in the comment section. I'll gladly and happily answer you. Thank you so much.